Hi everyone, my name is Rich Nilsson. I'm making this video for financial accounting at Brigham Young University, Idaho. I'm Brother Kerr. In this video, I'm going to be showing you guys how to solve exercise 3-5. So, go ahead and share my screen and go to it, and you guys can see what I've been working on. Go ahead and hide this. Okay, so here, that's 3-5 part level submission. There's 3 parts to this. So, yes. A tabular analysis of the transactions made during August 2017 by Sandhill Company during its first month of operations is shown below. Each increase and decrease in stockholders' equity is explained. So the accounting equation, assets equal liabilities plus stockholders' equity. Below we have the expanded accounting equation breaking out all the accounts. So assets are broken down into cash, accounts receivable, supplies, and equipment. Liabilities, and we have accounts payable. Then stockholders' equity is common stock plus retained earnings. Then retained earnings are further broken up into revenues minus expenses minus dividends. So for our expanded accounting equation, we have cash plus accounts receivable plus supplies plus equipment equals accounts payable plus common stock plus revenues minus expenses minus dividends. And we have a breakout of all the entries in the cash account. We have 9 entries in our cash account. There's 2 entries in the accounts receivable account. One pop-up came up. Sorry about that, guys. Anyway, antivirus is out of date, but that's okay. All right, we have 1 entry in our supplies account. We have 1 entry in our equipment account. 3 entries in our accounts payable account. 1 entry in our common stock account. 1 entry in our revenues account. 3 entries in our expenses account, and 1 entry in our dividends account. So down here it says our A's is prepare an income statement for August. So remember, for income statement, we have 4 of the months. So it's 4th month ended August 31st, 2017. And I already do this, make sure I assume you guys right, but there's a drop down menu. Just click on this arrow right here. So the first thing you want to put on an income statement are your revenues. So if we look up here, revenues, we have 1 entry under service revenue. You want to enter revenues, which service revenues. Go down here, service revenue. Start typing in, it'll bring a menu. Just click on it, and type the whole thing out. Again, you look up here, service revenue of $9,400. So there's $9,400 right here. Next, you have the expenses. Again, click there, drop down menu. There's 3 different expenses. So you come up here. What I did is I listed these in descending order, meaning I started with the highest first. There's right here. This is the salaries and wages expense. Come back over here to get them out. $2,800. So $2,800 right here. Pick one. Rent expense. So come here, rent expense on the second one, and come back up. See the rent was $820. So you're 820 right here. Last one, come back up here again. The utilities expense. And see here it's $280 under 280 right here. So follow my calculator so you guys can see the thing I've done. Go smaller and you can see. Okay, so you have 2,800 plus rent expense of 820 plus utility expense of 280. Hang on. Start over. Sorry, guys. Okay. As an 800. So 820 for the rent expense plus it's 280 for the utilities expense. Gives us total expenses of 3,900. Shown here in net income. So 300 plus revenues. Sorry, I did that backwards. Hang on. No, sorry, guys. So I take your total revenues, which were 9,400. You subtract your total expenses, which were 3,900. It gives you net income of 5,500, which you enter right here. Minimize that for a minute. So that's part A. Part B is prepare a retained earnings statement for August. List items that increase retained earnings first. So again, retained earnings statement, that's for the month ended August 31st, 2017. This arrow bring up the drop-down menu. We're seeing retained earnings August 1st. Again, let's compare tabular analysis of the transactions made during August 2017 by Sandhill Company during its first month of operations is shown below. All right, so first month, guys. So means the retained earnings is $0 since this is the first month. So you add and bring the drop down menu, bring up add and or less. So you add net income, and compare net income was $5,500. So your 5,500 right here. And that's gonna bring up kind of just be thorough. So 5,500 plus 0 equals 5,500. Now you already knew that, but you know it's kind of to be thorough. So I knew everything. So bring down 5,500 to the next line. Let's do less dividends. And if you come up here, dividends were $2,700. So it's 2,700 here. You have retained earnings August 31st. You have the drop down menu. You might calculate up. So we have 5,500 minus 2,700 gives us retaining earnings on August 31st of $2,800. 2,800 right here. That's part B. Now, the last one is part C. Prepare a classified balance sheet at August 31st, 2017. List current assets and order of liquidity. Remember, it says at August 31st, so balance sheet, you put just the date, not for the month ending or for the year ending, just the date. Your assets, so for scene select, pull up your drop down menu and select current assets. For order of liquidity, the most liquid asset is cash. Come up here and just total all these cash accounts. So I'm going to clear out our calculator. The first item is $19,600. I'll enter that. Next we have negative 1,700. I'll subtract 1,700. With that we have negative 630. Subtract 630. Next is 3,400. So we'll add 3,400. Next is negative 2,500. So we'll subtract 2,500. Next is negative 2,700. So we'll subtract 2,700 this time. Next is negative 820. So we'll subtract 820. Next is 510. So we'll add 510. Last one is negative 2,800, so we'll subtract 2,800. This gives us cash of $12,360. So enter 12,360 under our cash on our balance sheet. And the second account on our current assets is accounts receivable. Company accounts receivable is right here. There's two items, so clear the calculator. First one is $6,000. And second is negative 510, so we'll subtract 510 from 6,000. That gives us accounts receivable of 5,490. So we'll enter 5,490 right here. The last one on current assets is supplies. Compare supplies is $630. So there's just one item. There's subtract, so just 630 right here. And then bring up your drop down menu. Your next item is total current assets. So out of these three columns, I'll bring the calculator up. Check this out. Cash is 12,360 plus accounts receivable of 5,490 plus supplies of 630 gives us total current assets of 18,480. 18,480 right here. And then this count is equipment. I put property, plant, and equipment first, but I marked that one wrong, so you need to put equipment to get credit. No comparison, only one item on equipment of $5,100. So where are we at? So here, enter 5,100. Bring in a drop down menu. You want to select total assets. So you have the total current assets and equipment. I'll bring the calculator up. Yeah, I'm not sure what. Seeing everything. I'll fix this. Hang on a second, guys. All right, I don't know what it's. Let me show up about. Our total current assets of 18,480 plus equipment of 5,100. Total current assets of $23,580. Or $23,580 right here. And you have liabilities and stockholders' equity. See, list our current liabilities. So compare the top Liabilities is accounts payable. You have 3 different accounts on accounts payable. So clear. So first one is $3,400. So it's negative 2,500. So subtract 2,500 and 280. So we'll add 280. Give us accounts payable of 1,180. And here enter 1,180. Next you have stockholders' equity. So over here, stockholders' equity is common stock, retained earnings. So and here common stock first. And common stock, we have one entry of $19,600. So with an add, just enter 19,600 here. And below that, you have retained earnings. Come here. Now, see here, retained earnings equal revenues minus expenses minus dividends. So let's bring this over. You guys can see it on both. So revenues were $9,400. Minus expenses. First we have $820. And so subtract 820. This is 2,800. So we'll subtract 2,800. And the 280. Subtract 280. And dividends were 2,700. So we'll subtract 2,700 to give us retained earnings of 2,800. Down to the bottom, 2,800 here. Total stockholders' equity at a common stock and retained earnings. See if I can move this over so you guys can see. All right, so 2,800 here. So we add common stock of 19,600. Which will give us 22,400 to share. And so I just get one thing. This account, from the drop down menu, select total stockholders' equity. And total stockholders' equity is $22,400. And here you have the total liabilities and stockholders' equity. So the total stockholders' equity of $22,400. You add the current liabilities, which are $1,180. Open Excel for some reason. 1,180. So we have total liabilities and stockholders' equity of 23,580. Over here, as you see up here, that equals our total assets. And the accounting equation, assets equal liabilities and stockholders' equity. So these accounts balance. So that was exercise 3-5. I'll go ahead and stop sharing now. Okay, so that's all the steps. There's 3 parts. It's a little bit of work, but it's not too hard. I'm going to go ahead and stop this broadcast and upload this to YouTube. And once I do that, I will submit it to the discussion board. If you have any questions, go ahead and post them to the discussion board. You can also post comments on this video if you like. I'll answer any questions that you have. All right, good luck. I'll see you later. Good night.